Let's get right to the floor show. Brad Neuman is Alger's Senior Vice President and Market Strategy Director. He manages the Alger Russell Innovation ETF, which is chock full of both legacy and up-and-coming tech names. What do you think, Brad? I mean, this is a certainly good on the surface of it that the president is saying, yes, you guys should come, have dinner. You need to be part of this national and international conversation.
Well, I think the administration is supportive of innovation. You know, we think that artificial intelligence is one of the greatest innovations of our lifetime. You know, the Google CEO has said, you know, several years ago, actually, that it was more important to the human race than fire or electricity. So it's really important that the administration understand artificial intelligence, and we believe they do, and they're very supportive of the power and electricity needs. And I think, you know, as data centers move from 5% of electricity demand to 12% by the end of the decade, that's really going to take support from the administration. I think they understand that. As far as the issues with China go, there's the national security issues, I think, are where they're starting to take stakes, et cetera, that you referenced. And, you know, our view is that the more that these innovative technology companies can sell to China, the more that those countries like China will standardize on that technology stack. So we think it's a good thing if the U.S. technology proliferates around the world.
Well, you know, you look at NVIDIA. NVIDIA and Jensen Huang, the CEO and founder, has said the exact same thing. He said to dominate and to make sure that the world depends on America's tech stack, you got to sell into China. So that said, do you like any specific areas here when it comes to the innovators, the small guys, the bigger ones?
Well, I think we're living through a business investment boom. Right now, business spending is growing twice as fast as GDP. Tech business spending is growing 10 times as fast as overall GDP. You know, I think when a lot of people think about artificial intelligence, they think about some smart programmers in a room pushing some keys. The reality is that a lot of data centers have to get built all around the United States and the world, and there's a lot of physical rock and dirt that has to be pulled and pushed around. And so I think that there's a U.S. manufacturing renaissance because of innovation, the policy of the administration, and now interest rates potentially coming down further. And so I think companies like United Rentals, Martin Marietta, even waste companies like GFL Environmental, these companies will help bring that dream to reality.
I got to ask you about Apple, because Apple's been in the news. It actually did pretty well a couple of days ago. Listen, a week to date, it's up just over 2%. But that said, Craig Moffett, the longtime Apple bear, right? He is going positive here on this company. Well, let's not say positive. He basically said that he's upgrading it to a neutral. But he upped the price target from 139 to 225. It's at 238. So he's still obviously a little nervous about that. What do you see when you look at the macro picture for tech as it pertains to the markets? It is a little expensive, is it not, here with these valuations?
Well, Apple in particular, we think, has kind of missed the boat with artificial intelligence so far. And they've opened the door for some competitors. Now, we think that they have a tremendous opportunity should they be able to finally, get Siri to use artificial intelligence and monetize that with their huge customer base. So they have a big opportunity. As far as technology broadly, I think artificial intelligence enablers and adopters, so enablers being the ones that create the infrastructure and adopters being the ones who use that artificial intelligence, still have a wonderful opportunity if you're a long-term investor, despite somewhat elevated valuations.
I'm just looking right now at the S&P 500, and it just a second ago hit session highs. Do you think something that has to do with that, perhaps, is it actually something that we wouldn't like to see, and that is a slowing, sort of degrading job picture here? We got that ADP number, which was weaker than expected. First-time jobless claims at 11-week highs. Tomorrow we get that. All important, by the way. Stay tuned tomorrow, because the final hour of trade could be very, very rocky, depending on what the picture is. Or it could be very strong.
Well, I think the employment picture is weakening to some degree, and I think that'll allow the Fed to remain accommodative, because if they were only focused on inflation, they may not be so fast to ease. But I think that they will want to keep the labor market at full strength, and that will probably, drive them to ease.
Yep, and next week we have the Federal Reserve meeting. Fed funds futures show about a 97, 98% odds that we will see a quarter-point cut. Are you all in there?
I think it makes
Sorry,
sense.
2 weeks.
I think it makes sense for the Fed to cut. I mean, the short-term interest rates are still too high relative to where long-term inflation expectations are and long-term interest rates are.
It's great to see you. Thank you very much for joining us.
Thanks so much for having me.
Brad Neuman. All right.